Welcome to the Hurst Trading Room. This is our video update for the 10th of June 2013. We had a good week in the markets last week. We made profits in all of our trades, and it looks as if though the markets have turned. There was definitely a strong turn last week on Thursday. So let's take a look at the markets. Before we do, please make sure that you have read and understood these very important disclaimers. Here is the S&P 500. Now, as you know, we entered into a short trade in the S&P 500. Whether it was in fact a D category short trade or an F category short trade, we weren't absolutely sure of when we made the entry. I thought that it was probably a D category short trade. In other words, we were profiting from the move down into the 40-day cycle trough. An interesting thing has happened in this particular analysis, and that is that the 40-day cycle trough has been moved back here to the 13th of May. I actually think that that is an unlikely position for the 40-day cycle trough, and later on when we look at the upcoming trading opportunities in the S&P 500, we'll discuss whether that is in fact a valid position for the 40-day cycle trough. Nevertheless, it was a short trading opportunity, which turned out to be a profitable trading opportunity for us, and in fact it had the characteristics of a D category trading opportunity, because as you can see, here is our T2 target, and we exited from our trade 2 at the T2 target last week on Thursday, and as you can see, price dropped just a little tiny bit below that T2 target, and then it bounced up again. And that is very characteristic of a D category short trade, because what will often happen with a D category short trade is that the projection generated by price crossing the FLD from the pivot point there through the crossing point over there down to the target, which of course was over there, will often in a D category trade turn out to be a very accurate projection. So certainly it looks very much as if though it was a D category short trade. As you can see, for the first week of the trade, the market was behaving in a fairly unusual way, and price crossed down below the FLD. Then it came back up to the FLD, and then it sort of did a bit of a bounce around, and it's quite possible that that was of course a G and H category interaction. That's quite possible, and we'll speak about that later when we consider the upcoming trading opportunities. But when I recorded the video last week, we were in a bit of profit with the trades, and I think perhaps we'd exited from our trade 1 at the T1 target level, which was over there, and we'd adjusted our stop, but the trade wasn't looking as if though it was definitely going into profit. Of course, last week we saw the market fall a bit further, and we exited from our trade 2 at the T2 target level on Thursday over there, and our stop loss was raised to the break-even level, or lowered to the break-even level. And in fact, our trade 3, because we started implementing the 3-bar trailing stop, our trade 3 exited earlier today at this level over here. That was where our trade 3 exited, and we made a fantastic profit of about $5, I think, on trade 3. Which is something that of course often happens, particularly in a D category short trade, because you'll find that you make your profit from your trade 1, you make your profit from your trade 2, and then the market bounces back as soon as it has achieved or fulfilled that trade 2 target, which is of course the cyclic target. So it indicates that the cycle move is over, and so very often your trade 3 will either exit at a break-even level or at a very small profit, as it did in this case. So that's what happened in our S&P 500 trade. What looked as if though it might be a disappointing trading opportunity turned out to be a very good, profitable trading opportunity. And the same thing, in fact, happened in the Nasdaq. So let's take a quick look at the Nasdaq. Alright, here you can see our entry into this trade, and again this was taken as a short D category trading opportunity. Our entry was affected down here. That was our entry price. It was a slightly displaced entry because of our rules for not entering into a trade within the previous bar's trading range, but not displaced very much. And our T1 target was reached last week only on Wednesday, as price dropped down to that level over there. And in fact, you might remember that in last week's video, the T1 target had been missed by only a few ticks. Of course, we don't have any rules for what to do when price misses the T1 target by only a few ticks, because the T1 target, as you know, is not a true cyclic target. The T1 target is generated as a result of the relationship between the crossing point, the entry price, and the pivot point, and it's not a cyclic target. However, the T2 target is a cyclic target, and so there's an interesting distinction between those two targets. If we miss the T1 target by only a few ticks, we don't react in the way that we do when we miss the T2 target by a few ticks. Now here you can see that on this chart, the T2 target was almost exactly hit over here. In fact, I think price dropped only 2 or 3 ticks below that T2 target, and then it bounced up again. And on this chart, and because of where the T2 target was calculated for this chart, we did exit from our T2 target, but I know that some of you had calculated a T2 target which was a few ticks lower, because I received some emails and communicated with some of you about that. And as you pointed out, that was an example of the T2 target being missed by only a few ticks. You will know that it's in module 5, I think. There's a video about what to do when the T2 target is missed by only a few ticks. And of course what you do is you tighten your stops, because the T2 target is the cyclic target. And if price moves to within a few ticks, or moves very close to the cyclic target, then actually the cyclic move that you are trading, or the move that is being caused by the cycles, is most probably over. And because of various other influences, your target was missed, but only very, very slightly. And so you should really get out of that trade. And you'll know there's a video in module 5 all about how to exit from a trade when the T2 target is almost reached but not quite. And last week was a perfect example. On this particular chart, because of where I calculated my T2 target, in fact, I did exit from this trade, but it's quite possible that you could have calculated a T2 target slightly lower. How is that possible? Well, of course, the T2 target is calculated on the basis of where the median price line, and at the moment, of course, we're looking at candlestick charts, and not the median price. So perhaps I should change that to the median price. But there are some interesting subtleties that is really worth understanding here. First of all, at the time of our entry, we considered the FLD level on that bar over there, which was that level. Okay, that was the level of the FLD at the point at which we expected price to cross the FLD. And that's what you always do when you go into an entry. You look at the level of the FLD for the next bar. A bar or two later, you need to look back and you need to say, hang on, at what level did median price, that's the mid price between the high and the low price, at what level did the median price actually cross the FLD? Because that is the actual crossing point. That's the actual crossing level. And so let me display median price here, and we can see that. There is the median price, and so you can see that median price actually crossed that FLD over there. Okay, and so it was just a little bit above our entry price. Some people aren't that exact about it. If you're using the Click to Trade plugin for Sentient Trader, then Sentient Trader does calculate it exactly like that. But you might prefer to take a slightly more visual approach, which is actually the approach that I prefer. So I look at my candlesticks and I ask myself, at what level was this FLD crossed? And so I've got the FLD there, and I've got price here. So in fact, I calculate that crossing point to be slightly higher. Now, this is a matter of personal preference, but that's how I like to trade. Perhaps I'm a little bit old-fashioned. I'm used to working manually on charts, and I believe you need to give the markets a little bit of room, and being absolutely accurate to the fifth decimal place, I think, is unnecessary and can sometimes lead to errors. And so because my crossing point was slightly higher than the exact crossing point calculated by the median price, as a result my T2 target was ever so slightly higher, and so I did in fact exit at the T2 target. If you had been taking the more mathematical or accurate approach, you would have calculated a slightly lower crossing point, as I've indicated. So your crossing point would have been slightly lower, and as a result your T2 target would have been slightly lower. And I know that many of you did have a T2 target that was just a bit below the low of that bar, and so on Thursday evening you were asking yourself, what should you do now? Because of course price had almost reached your T2 target but not quite. And the answer was to tighten your stops. And as you know from that video, there are various ways of doing it. The one thing you could have done was exited at the high of that day. So you could have exited over there. The other thing you could have done was to see if you could draw a tight trend line and exited at the level of the trend line. Or perhaps a looser trend line, and exited over there. You have various options. It's a matter of personal preference. So that was an interesting situation in the Nasdaq last week, that the T2 target on many of your charts was almost reached but not quite. Of course, once you exited from your trade 2, your trade 3 stop would have been adjusted to the break-even level, and so you can see that our trade 3 was exited at the break-even level. Sentient Trader has drawn a red line there, as you can see, which indicates a losing trade, or in fact a break-even trade, because Sentient Trader considers a break-even trade to be a losing trade, because generally you're paying costs on top of that, so it is a losing situation. So that was our trade 3, and so we had a very good profitable trade in the Nasdaq, as well as the S&P 500. It was a quick trading opportunity, which is often the case with a short category D trading opportunity. Now, in the euro to US dollar, you will remember from last week's video, we were exited from our open trade. Let's go and look at that quickly. And it was a disappointing exit from the trade, because as you can see, last week the market really did move up very strongly, and we exited from our trade 3 at the break-even level over there on the Friday of the previous week, and that was a little bit unfortunate, but we cannot cry over spilt milk. We nevertheless made a profit from that trading opportunity. We could perhaps have bent the rules slightly and adjusted our stop to instead of the break-even level to below the low of the previous bar. Some people might do that. I don't. I tend to just follow the rules, and occasionally we get stopped out of trades which would have run on to be profitable. But I'm not too concerned about that, and the reason is because I do trade closely correlated instruments. And I've spoken about this many times before, and the reason I trade closely correlated instruments is because when there is more than one approach or more than one possible analysis, I will tend to trade one analysis in one instrument and the other in the other instrument. And when you have a situation like this occur, where the euro to US dollar was stopped out, unfortunately, at a break-even level, we didn't make a loss on the trade, we still made a profit, but the trade was stopped out in the euro to US dollar, and it wasn't in the British pound to US dollar. and so I still profited from last week's move. So let's take a look at the British pound to US dollar, and there it is. Here you can see the very profitable trade that we are in at the moment in the British pound to US dollar. And of course, this trade is an A category long trade. A category long trades are great trades. They often turn into very profitable trades. They can be difficult trades to enter into because, of course, you in the back of your mind are worried that it might turn into a G category trade. Okay, but we were fortunate in this circumstance, and well, we did our homework, and if you go back and look at those videos, you will see there was good reason to believe that this would turn into an A category long trade instead of a very weak G category trade, which of course it didn't. So we entered into the trade over here about 10 days ago, and this is our entry price, of course, this green line over here. And our T1 target was reached on the first day of the trade, which is not unusual, particularly for an A category long trade. Our T2 target was somewhere over here, and so we took our profit from our T2, from our trade 2 at that point, and our trade 3 is still open. As you can see, we're making a very nice $1,300 profit on that trade 3, and we profited from that very strong move up last week. So in fact, I wasn't worried about the fact that I'd missed the opportunity in the euro to US dollar, because I was profiting from the same opportunity in the British pound to US dollar. Now, we have our 3-bar trailing stop, which is being implemented, and in fact, if I clear this, you will see that the 3-bar trailing stop is right down here. Why is that? Surely the 3-bar trailing stop should be coming up a lot closer to price. Well, if we count back our bars, you will see why that is. First of all, Friday's bar was an inside bar, okay? Lower high, higher low than the previous bar, so that was an inside bar, so we don't count that bar. So 1 bar back was last week Thursday. 2 bars back was last week Wednesday. Last week Tuesday was another inside bar, so we don't count that bar. And so 3 bars back takes us all the way back to last week Monday. And the lowest low of those 3 bars is of course the low of last week Monday, and that's where our 3-bar trailing stop is at the low of last week Monday. And of course, as price action unfolds this week, that 3-bar trailing stop will be moving up. But something interesting is happening here, which is that the character of the A category trade, and module 4 in the FLD trading strategy course is all about the character of these different trades. And character is a very important thing, in my opinion, not just because I'm a filmmaker and love telling stories, and characters are really important to me, but it's also important to me in terms of trading, because when you're in a trade, if the trade doesn't feel right, then it usually means that the character of the trade is wrong and that something else is happening, and you should realize that before it's too late. And this is an example of a trade where the character does feel right. A category trades often feel like this. They go up really strongly, and then of course price will come back down to the FLD in a B category interaction, which we would not want to trade, and in this situation I won't be trading it. But when the character feels right like this, it increases my confidence in the fact that what we're doing here, the trade that we've taken, is in fact the correct trade. And so what I was going to say about it is that very often in A category trades, you get these inside bars happening on the corrections. And as a result, your 3-bar trailing stop gives you quite a lot of extra space, which means that in an A category trade, your 3-bar trailing stop will often give you that little bit of extra space, which allows you to actually run through into a C category trading opportunity. So you go all the way from an A category opportunity into a C category opportunity, and you don't you don't change your position. Your trade morphs itself into a C category trading opportunity, at which point, of course, you need to start thinking about getting out of the trade. So those are the trades that we're in at the moment in the Hurst trading room. Thank you very much for joining me in the Hurst trading room for the update today on the 10th of June 2013. If you have any questions or comments, please put them into the box below this video, and I look forward to seeing you next week in the Hurst trading room, and as always, wish you profitable trading.